There's a decision that separates the comfortable from the financially free, and most people get it completely wrong. It's not about how much you save or how little you spend. It's about where you put your money and how long you let it sit there doing the heavy lifting for you. So here's what I wanted to find out. If you took $100,000 today and put it into one of Vanguard's index funds, not spreading it around, not trying to be clever, just picking one fund and letting it sit, what would actually happen? Today, I'm running that exact experiment across 5 of the best Vanguard index funds, showing you how your money grows inside each one, from the entire US market to pure technology. I'll show you an index fund that can generate over $80,000 in annual dividend income. And in the end, I'll reveal the top pick that can turn a single $100,000 investment into nearly $13 million. But before we dive into the results, let's get a quick sense of why these 5 funds stand out in the first place. See, selecting the right Vanguard index funds isn't about chasing popularity or the biggest recent gains. It's about finding a balance between performance, risk, and long-term reliability. The 5 funds on this list were chosen using clear criteria: consistent historical growth, healthy dividend yields, strong performance across 1, 5, and 10-year periods, and exposure to sectors built for the future. With those principles in mind, let's begin the countdown. Coming in at number 5, we have the Vanguard Institutional Total Stock Market Index Fund, ticker symbol VITPX. Inside, you'll find more than 3,000 companies, from household names to thousands of smaller firms quietly building the next big thing. VITPX tracks the CRSPUS Total Market Index, which basically means your money is spread across nearly every corner of the economy. About 39% sits in technology, 11% in financials, 13% in consumer cyclical, around 10% in healthcare, and another 12% in industrials. That mix makes it one of the most balanced ways to own a piece of the entire US stock market. And of course, the heavy hitters lead the pack: Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Alphabet, Tesla, and Berkshire Hathaway. Together, they make up roughly a third of the fund. The rest is spread across smaller and mid-sized companies that help keep things stable and dynamic. Performance-wise, over the last decade, VITPX has returned 168.02%, with 52.50% growth in the past 5 years and 17.16% over the last 12 months. Not bad for a fund that doesn't try to time the market. And because it's Vanguard, efficiency is baked in. The expense ratio is just 0.02%, which means for every $100,000 you invest, you'll only pay about $20 a year in fees. The fund also barely trades, with only about 4% turnover each year. In plain English, that means they buy and sell very little, keeping trading costs and taxes super low, so more of your money stays invested and keeps compounding. Now let's look at the numbers that make this fund so compelling. VITPX currently pays a 1.12% dividend yield, with dividends growing at 10.04% a year for the past decade. On top of that, the average annual share price has appreciated by around 9.11% per year. So what does that mean for your $100,000? After the first year, your portfolio will be valued at around $110,230. In 10 years, that investment is projected to reach about $241,450. After 20 years, it could grow to roughly $582,850. And if you stay invested for the full 30 years, that same $100,000 is projected to reach $1,407,100. By that time, your portfolio will be paying around $15,760 per year, or about $1,313 every month in passive income. Out of that total, roughly $1.28 million will come from capital appreciation, while another $127,100 will come from reinvested dividends, bringing your total value added to around $1.4 million. At number 4, we have the Vanguard Consumer Discretionary Index Fund, ticker symbol VCDAX. This fund thrives on a simple idea. When people have money to spend, these companies grow. VCDAX tracks the MSCI US Investable Market Consumer Discretionary 25/50 Index, which gives you a focused look at all the companies shaping modern spending habits. About 96.66% of the fund sits inside the consumer cyclical sector, businesses tied to lifestyle, entertainment, and personal spending, with small portions in consumer defensive tech and industrials. The top holdings are names we all know: Amazon, Tesla, Home Depot, McDonald's, Starbucks. Together, the top 10 holdings make up roughly 58.03% of the total portfolio, which is on the higher side, a clear reflection of how a few dominant brands capture most consumer spending power. Over the last decade, VCDAX has returned about 261%, with 49.38% growth over the past 5 years and 17.21% in the last year alone. And like most Vanguard funds, it's built for efficiency. The expense ratio is just 0.09%, which means a $100,000 investment costs only $90 a year in management fees. Turnover sits at about 6%, meaning the fund trades very little, keeping your taxes and costs low. Here's how it breaks down by the numbers. The current dividend yield is 0.75%, and dividends have been growing at about 5.54% per year for the past decade. But the real engine here is price growth. The fund's share price has appreciated roughly 11.79% per year on average. So what could that mean for your $100,000 investment? After the first year, your portfolio will be valued at around $112,540. In 10 years, it's projected to reach about $320,731. After 20 years, it could grow to roughly $1,041,419. And if you hold on for 30 years, that same $100,000 may be worth a solid $331,387,871, paying around $33,321 per year in dividends. Out of that total, around $2.95 million will come from share price growth and another $351,576 from reinvested dividends, bringing your total value added to roughly $3.2 million. These are solid returns, no doubt, but there are even better options to come. A fund that can turn a $100,000 investment into an $8 million portfolio. And in the end, I'll show you the top pick that can turn that same investment into a $13 million portfolio. So stay tuned for that. And if you're already finding this valuable, consider subscribing to the channel. All right, at number 3, we've got the Vanguard 500 Index Fund, ticker symbol VFINX. When you invest in this fund, you're basically buying into the backbone of the American economy. The company's shaping technology, healthcare, finance, and innovation every single day. Inside, you'll find names that almost everyone knows: NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, Alphabet, Tesla, Berkshire Hathaway. These top 10 holdings make up about 39% of the fund. It's slightly heavier in one sector, about 35.14% in technology, but balanced across all other sectors, including 13% in financials, 10.57% in consumer cyclical, 10.91% in communications, 9.61% in healthcare, and 7.50% in industrials. That balance is what gives the S&P 500 its trademark stability. When one sector slows, another often takes the lead. And over time, that balance has paid off. According to the latest data from September 2025, VFINX returned 17.43% over the past year and posted strong gains of 24.76% over the past 3 years. The fund delivered 16.31% over the past 5 years and an impressive 15.14% over the past decade. It's built for endurance, not excitement, a long-term performer that mirrors America's progress. Whether it's a new iPhone release, a medical breakthrough, or a leap forward in artificial intelligence, chances are the company behind it is part of this index. With over $1.48 trillion in assets, VFINX has become the foundation of countless retirement portfolios and long-term wealth strategies. The expense ratio is just 0.14%, which means a $100,000 investment costs only about $140 a year to manage, and it has a very low turnover rate of just 2.3%. Now let's look at the numbers that really matter. VFINX currently offers a 1.07% dividend yield, with dividends growing at an average of 5.14% a year. Its share price has historically appreciated by about 12.76% per year. So if you invested $100,000 in VFINX today and simply let it grow, here's what the projections look like. After the first year, your portfolio will be valued at around $113,830. In 10 years, it's projected to reach roughly $355,669. Stay invested for 20 years, and you'd be looking at around $1,218,919. And if you hold for the full 30 years, that same $100,000 would compound into $4,117,585, paying close to $43,910 per year in passive income. Out of that total, roughly $3.94 million will come from share price growth and another $172,828 from reinvested dividends, giving you a total portfolio value added of just over $4 million. At number 2, we've got the Vanguard Russell 1000 Growth Index Fund, ticker symbol VRGWX. If the total market funds represent stability, then VRGWX represents evolution, the next generation of industry leaders changing how the world works, shops, connects, and creates. This fund tracks the Russell 1000 Growth Index, which includes America's largest and fastest growing companies. It leans toward firms that are expanding revenue quickly, scaling their reach, and dominating emerging industries. Inside the fund, the story is clear. It's heavily tilted toward the biggest names in technology and innovation. The top 10 make up almost 60% of the entire portfolio. The sector breakdown says it all. Around 51.2% in technology, 13.41% in consumer cyclical, 12.59% in communication services, 8.16% in healthcare, and 6% in financials, with the rest spread across smaller sectors. It's a lineup laser-focused on innovation, growth, and transformation. Performance-wise, VRGWX has been one of Vanguard's strongest long-term performers. According to the latest September 2025 data, the fund returned 25.45% over the past year. Over 3 years, it delivered 31.55% annually, and over 5 years, it posted 17.51% annual returns. Over the past decade, VRGWX has returned an incredible 18.76% annually. It's a fund that thrives during periods of technological disruption. The expense ratio is only 0.06%, which means a $100,000 investment costs just $60 a year in fees. The turnover rate sits at 14%, which means the fund trades slightly more than the others, but not excessively. The returns here tell a clear story. Dividends sit at 0.47% with growth averaging 4.24% annually, but it's the share price that does the heavy lifting here, rising roughly 15.81% per year. So if you invested $100,000 in VRGWX today and simply let it grow, here's what it could look like. After the first year, your portfolio will be valued at around $116,280. In 10 years, it's projected to reach about $444,861. After 20 years, it could grow to roughly $1,944,626. And if you give it the full 30 years, it has the potential to reach a massive $8,457,137. Being growth-focused means it doesn't pay much in dividends. But if you look at the total value added, it sits at $8.35 million, with the majority of it, around $8.33 million, coming from share price appreciation and only $120,899 from reinvested dividends. Finally, at number 1, we have the Vanguard Information Technology Index Fund, ticker symbol VITAX. If there's one sector that has redefined the last 2 decades, it's technology. From artificial intelligence to cloud computing, from microchips to mobile apps, tech has shaped every corner of how we live, work, and connect. VITAX gives you a front-row seat to that transformation. It tracks the MSCIUS Investable Market Information Technology 25/50 Index, which includes the most dominant names across hardware, software, semiconductors, and IT services. Inside, you'll find the leaders of global innovation. The top 10 make up about 58.8% of the portfolio. Nearly 98.26% of this fund is pure technology, with only tiny slices in communications, financials, and industrials. That concentrated focus means it can swing more in the short term, but over time it's been one of Vanguard's most explosive long-term performers. And the numbers prove it. According to recent data as of December 2025, VITAX returned 21.48% over the past year. Over 3 years, it delivered 30.16% annually. Over 5 years, it posted 18.40% annual returns, and over the past decade, VITAX has returned an incredible 22.20% annually. It's powered by the same megatrends driving the global economy: artificial intelligence, automation, data analytics, and digital transformation. The expense ratio is just 0.09%, which means a $100,000 investment costs only about $90 a year to manage. Because VITAX is growth-focused, it doesn't pay much in dividends. But that's the trade-off. You get exponential growth instead. That's why its current dividend yield is just 0.40%, with a 10-year dividend growth rate of 10.34%. But the real driver here is price growth. The fund's share price has appreciated roughly 17.44% annually, and that's what fuels its massive long-term returns.